Virtually.
Hello, everybody. I hope you're doing well. Thank you for coming. Thanks for watching the event. We've got Jake Bernstein and Brian Latta. They always do a fantastic job. We always love having them. So it's good to see you. If you're joining us on YouTube, I have a special favor to ask for you. Would you hit the like button and the subscribe? And if you have questions, ask. If you have chats, ask. That engagement really helps us with YouTube. We're trying to grow the channel. We're up to 70,000. My next goal is to get to 80,000 subscribers. And it really does help. If you can help us grow the channel, it allows us to attract better guests, have better webinars, all that kind of good stuff. And so my agreement with you, if you would, is if you just subscribe to the channel, you'll be able to kind of come to all of our events. We have very interesting events, and it just helps us. It helps us a great deal. I appreciate it. So with that out of the way, I want to say thank you for being here. It's so good to see you. You're going to be really excited because the first thing I'm going to do is read a legal disclaimer. So today's demonstration is designed to instruct you on use Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation should be construed as investment advice or the solicitation to buy a security. So there we go. Hope you enjoyed that. Our guests today are Jake Bernstein and Brian Latta. Jake and I consider Jake a very good friend of mine. I believe he placed his first trade in the 60s. He's a prolific author on trading books. He's written a number of them. An educator. He does a daily sentiment index. He does a lot of seasonal analysis. One of the most prolific technicians that we work with, and somebody that I have a lot of great respect for. Also, we have Brian. Brian has invented and kind of helped Jake put together the JBXC indicator. I refer to the JBXC indicator as the Swiss Army knife of indicators. It can help you determine trend, both long-term and short-term, strength, overbought, oversold, and they're going to talk a lot about that today. So without further ado, Brian, Jake, let's get you going. How you guys doing?
Doing good. How about you?
I'm good. Brian, I think you're the one that's going to be sharing your screen today. Is that correct?
I am.
Okay. Let me go ahead and make you the presenter so it'll pop up and say, hey, do you want to share your screen? You've done this before. You know what's going on.
I've done it before. Just let me say a couple of words. First, I want to apologize for the voice or lack thereof. I had some elective surgery 2 weeks ago on my vocal cords, and it's not completely healed yet. They're trying to make an old man sound like a young man, but first he's got to sound like an old man first.
For sure. Yeah. No, and I appreciate you coming in too, even with that. So hope you heal well.
Thank you. It's an absolute pleasure to be here. I feel much better than I sound, and it's an opportunity for you to learn from Brian, who's an excellent teacher and an excellent coach, who developed the expansion contraction indicator with help from me using some of my indicators. I'm just going to chime in from time to time. I also want to say it's an absolute pleasure to be working with Stock and Jeff. You guys are the super guys who make my stuff really work well, so I appreciate that. I'm going to turn it over to you, Brian, before I totally run out of voice.
That's okay, Jake. We still appreciate you here. We're glad your voice is on the mend. And of course, that you just had some elective surgery to repair and improve your voice, just getting through the being on the mend part. And it is good to hear your voice again as it is recovering, and hopefully it'll get back to normal or better.
Thank you, Brian.
Brian, before I jump and get out of the way, I just want to make sure or confirm I can see you. I can see your screen and I can hear you. So everything's looking good on this end. I'll let you know if I see any questions that, and it feels like a good time to interject, but I'm going to get out of the way for now.
Thank you for that, Jeff. And I am live. You should be able to see, unfortunately, a very small red cursor. Ideally, this would be a larger cursor. But again, right now, that is live. and sharing. So as you're seeing on here, expansion contraction indicator is based on Jake's moving average channel strategy, which has already been proven to show positive outcome over time. It's been back tested and forward traded, and we've done the same thing with expansion contraction. It's really just identifying how fast price is moving up or down through Jake's moving average channel. So all of this, again, is just, you can see where it says it's defining trend long-term and short-term trend and strength. It will show a mathematically calculated overbought or oversold, not some type of a fixed value, as most are. We want a concurrent, in other words, non-lagging and right up to date and adaptive indicator, ideally. It is going to identify multiple support and resistance levels from the past, minor and major, as it expands and contracts. And as I said in here, it is not lagging. It is.
Brian, you want your pointer to show? You want your pointer to show, or your little blue dot, your laser pointer?
I'm sorry, Jake, I can hear what you're saying, but I couldn't quite make out what you said. Are you referring to the cursor?
Yeah, your laser pointer.
I was pointing to the pen.
Oh, there you go. You got it now.
There you go. You're right. I was looking at that being really small and not remembering the cursor being so doggone small, and I had selected the pen. Thanks for that, Jake. Get me back up on track here. So again, we're not lagging price like typical moving average strategies or others, and we're going to show a little bit of that. So as we had to go through the disclaimers or regulations already, ideally we reduce regulations, but it's absolutely required here because I am going to show some past performance. And obviously, we can't guarantee the future, but to be honest, I'd rather trade something that's proven to be consistently profitable than not. And that is one of the things I've learned from Jake, how in using setup, trigger, follow through, his process of developing systems, right? Learned how to develop trading systems. So I'm not going to read these word for word, and obviously, Jake, just jump in anytime if you want to add to or correct anything I say. That's absolutely okay. As you can see, even at the bottom, both Jake and I have slightly different ways of using that, and the most important thing is that you determine exactly what you're going to do and how you're going to use it. So as Jeff was commenting on earlier, Jake's got a lot of background, decades. I'm trying not to make you sound too old, Jake, but you've been around a long time. I got to say, in listening to you for over a decade, almost every time I listen to you again, I still learn something new. So the main thing here would be listen, learn, and eventually you're going to start to hear some things that you can put into use. So I'm relatively much newer to trading. Jake's over 50 years. I'm just over 20. I do have my own trading company and have written the published, not publicly published, but online published the Secret Language of Trading on the Markets. And that one just wanted to put out basically trading for a living and give that away also. And that can be found at Expansion Contraction, as you see at the bottom. And so can the indicator, as it's been coded for over 5 different major markets. And the process here at Metastock is actually included the Expert Advisor, which is a great add-on that we're going to show a little bit more about that soon. So I've had many years of coaching, and I do like helping individuals. And what I've heard more than anything is that I want better entries, I want better exits, and I want to be more consistent. And literally what I do is basically say, well, why haven't you done that yet? However, if we know when to get in or when to get out of the gain or a loss in advance, and if we know it's the right thing to do and the right time to do it right now, it's because it's so simple. It can be coded by a computer, which means it can be back tested in its individual parts. And then we know this system has been consistently positive outcome in the past. And we'd assume that it's more likely to continue to show positive outcomes in the future. But on this little add-on here, the thing most people miss is proving it to yourself. So big change for me once I coded strong trends. And that helped a lot with Jake's 5 above pattern. It is what his definition of a strong trend is. And for those that seem to get this as a coach, they have a strong trend definition, they trust, they're willing to just get in now, as they've already proven that the setup conditions have been positive outcome in the past. So ultimately, you just take the trade, you manage whatever you get by following the rules. And if there's one thing from Jake that you should use all the time, follow the rules is one of the great statements on that. I'm going to just briefly touch on some of the challenges of using some of the standard indicators for coding systems.
Can I just jump in for 1 second, Brian?
Sure, Jake, go ahead.
One thing that you're going to find with the work that Brian and I do is this. You never have to interpret anything. It's crystal clear. As a trader, if you find yourself having to think about something, wondering whether it's the right thing to do or not, then you either don't have rules or you don't know the rules. And that is usually a tip-off that you're going to lose money. We are completely objective, which is why Metastock has been able to program our rules and do it exactly according to the rules. If you're not going to do that, don't even bother trading, because even though you might be winning in the short term, you're going to lose in the long term. You have to have completely objective rules, and you have to use them. You've probably heard that 1,000 times, but it is absolutely true. I can tell you that from over half a century of trading, and I'm going to let you go. Go ahead, Brian.
Yeah, thanks for interjecting that, Jake, because you're completely right. If it's not 100% objective, not clearly defined, if it's not written, if a computer can't trade it by clear rules, then you really don't have a system. And I've created some systems that were not codable and some that were. The main thing is keep trying. And if you're in a trade and today pops up and you go, man, I don't know whether I should stay in or get out, your rules aren't clear, and that's clear rules help me eliminate the doubt of what to do on any given day, and eventually you want to get there. So on this one, I've just popped up a standard indicator on this and pricing with just a blank chart, because again, if we're looking to just use standard indicators, we might need to have some coding that says when, in this case, MACD crosses bullish, I want to be a buyer, or we also have some sell setups. If MACD crosses the downside, I want to be a seller. And I just did this pretty quickly to give you some idea of indicators can have some consecutive losing periods on that one where the setups are choppy and come almost on top of each other without any kind of strong pricing in between. Or we might get a setup and go for a long period of time up a little and down a little and end up back where we started on that. And of course, if we pop over, there's potential to get some bigger winners out of that. But if we looked from the beginning of the year throughout 3/4 of the year here, we're not really seeing some consistently positive outcomes here where we have small average losers that occur less often than, say, larger average winners on that. So I'm going to pop up a second common indicator. If you don't recognize this, this is RSI. And all I did on the next screen was code whether or not we should be a buyer as we go above 50 or a seller below 50, and we have that same problem. Choppy patterns, some potential for bigger winners. There's another 6% move in here and followed by a 4%, but obviously if we're getting lots of little losses in here, we don't have our minimum objectives here of win more often, and Jake's suggestion on strategies is a 60% or better win rate. I shoot for that also. And ideally, the profit to loss ratio is acceptable. In other words, 1-to-1 or better, or at least if it's a little bit below 1-to-1, the net gains are still better than the net losses over time. And ideally, we got proof of that. Go ahead, Jake.
And I see we've got a lot of BS over here, don't we?
I do joke about that. I do prefer to have a BS on my chart, but not a lot of BS, if that makes sense. It is one of the things I learned from Jake, that it's not about taking a lot of trades. It's about trading with high probability setups, consistently proven to be profitable in the past. So in this one, I've just marked up again, you need a clearly defined trading plan or process. It should meet your objectives. Are you looking for growth? Are you looking for income, or both? It needs to suit your style of trading, if that makes sense, because if you're trying to day trade and you don't know day trading is about to drive you nuts because you really can't get up and use the facilities or anything while day trading, So that ties you to a computer. And personally, I'm not interested in being tied to the computer. I'm interested in taking a small amount of time and making a decision daily or weekly and just following it. But it should also fit your risk tolerance. And as a coach and trader, what I see most often are people taking too many trades with too much risk at once. And certainly personally, the one time I had an unacceptable drawdown, that's exactly what I did. I did too many trades open at once with risk, and a sudden market reversal occurred, and I had an unacceptable drawdown, and made sure that did not happen again. So for you, as you're following us, if you're having events that you don't want to repeat, you better have new rules of making sure that doesn't happen. So Jake's setup, trigger, follow through method is really just define the rules to get in, define the rules to get out at a loss, define the rules for taking profit in advance. Secondarily on these, the rules should be made that we have risk limiting rules on getting out at a loss, risk limiting, in other words, small losses and small average losses are one of our objectives. Got to control losing, because we can't control sudden reversals in the market or consecutive losers. They're just mathematically normal. If we're looking for big profit, are they profit maximizing? Jake's comment, the big money's made in the big moves, and even using his commitments a trader's process to find the potential for a big move before it happens. We need to have rules that get us in, keep us in, and help us get the big winners from time to time. Now, I am going to say written, it can be in the computer, but everything should be written out, because then it's potentially codable and ideally back tested. You're going to learn your rules really quick if you manually do some back testing. And what we're going to show today, and have been showing on subsequent or will be showing in subsequent sessions and have shown in past, is what are the system results walking forward. So we're going to show some of that today. So for anybody that really is looking to trade, ideally before you take a trade, you'd be able to see what to expect from testing in the past, so that at least you know, before I take this trade, it's been tested, it's been shown to meet my objectives, have a small capital exposure, and give me the potential to get big winners when they happen. So and popping into expansion contraction, where I was saying it was different than most indicators, again, that was because it's not lagging. It doesn't require, say, 20 periods for a simple moving average to plot today. It only needs today to plot today, because it is, as I said, measuring how fast price is moving up or down through Jake's moving average channel. So expansion contraction, and the second way it's different is it has a second part of the code that is a trend filter. So basically it shows the short-term price movements up or down through Jake's moving average channel, and it adds a trend measurement on that one, which is basically combined so that the short-term moves expand quickly into long-term moves. And ideally that helps us with, say, a dual perspective and 100% clear coding for short-term and long-term moves, as we do know that's how the market moves. As I said, we're going to mark up every bar on the chart. Dark green bars are the strongest part of a move up. Light green bars, when we see them, will be the weak up. It'll still be a uptrend, but it's just weak. Light red bars on the charts that are 100% coded there are a weak bear type market. And if we're seeing red or dark red, it's a strong down. So again, if we have strong up or strong down and conditions that are weak when we're not strong trending, then we know when to trade and in what markets to take the trade. As ideally, if you're looking for growth, you're looking for strong trends that trend strongly. I'm going to say forever, because that's just fun, but obviously nothing trends forever. We would have rules of when it's no longer trending and when to get out. So expansion contraction, when I said measuring strength or weakness, in order to keep it relatively simple, the normal range does take a lot of data to plot. It is using standard deviation mathematically, but it's just showing us what's normal, so that we can see if expansion contraction is above average or just average, long-term or short-term. So as we mentioned at the beginning of this, it helps you with, are we up, are we down, are we strong, are we weak? Basically, I like to call that reality at the right edge of the chart. So as I said, you'll always know what to do and when to do it. You'll be right now, and you'll always know when the conditions are weakening or have reversed. So ideally, we'd just like to be 100% objective on that. And we have back tested the rules, when to get in, where to get out at a gain or a loss, and we see win more often results. I won't say with all of the market. I've seen a test of all 500 stocks, well, 500 plus stocks in the S&P, and generally more were up, and there were more strong up than there were bear markets on that one. And that's what's helping us with this win more often, make more than you lose on average. And again, our focus is on some of the top weighted stocks. I know I use 5 million shares average 20-day volume, or I'm not interested in trading it. And definitely we want to be in a strong trending sector. So if you're looking to trade, say 1 or 2 or 3 maybe of the top weighted stocks in a strong trending sector, you're always giving yourself the best opportunity to be in a trade that gives you the biggest winner. And that means you also know when to rotate out. So again, even if you haven't traded this before, it's visual and should be fairly obvious. I did pull up the not only with the expert advisor, but the metastock chart that shows the triangle here that's really giving us the 11/3/2023 strong buy setup and expansion contraction. As you can see, there is still BS on this chart, but there is less BS on here as the expansion contraction. At the bottom, duration on the average trends typically tends to be some 24 to 30 periods or more. And on a daily chart, that gives us an opportunity for a potential to be in for more than a month. So as we're seeing on this, we're seeing lots of green and light green bars, strong up again and light green bars. I'm going to describe this a little bit better here in detail, but ideally we've got clear rules of when to get in and where to get out at a gain or a loss in advance. So as I marked up here, we did have a clear entry on the strong buy. If you don't have the expert advisor, the BS will still plot on the chart, so your buy setups will still show. There are some small diamonds on here, which are additional profit-taking rules on here that you're going to see. I will give away all of the rules a little bit later. And this, of course, did last for quite some time before we had a sell setup that triggered in the middle of the chart and dropped, and then another buy trigger, you can see with the arrow and the B corresponding to expansion contraction, starting to show short-term bullish with the green line above the red line, and the cone or the cloud in the background turning green. So cone shaded in the background is the trend filter. The red or the green line are the short-term swing filter, and all that gets coded up, easy to see in strong moves up that last over time, or strong moves down. In this case, it didn't last very long, and ultimately gives us clear rules of where to get in or out at a gain or a loss again. As I mentioned before, if you do have the expert advisor, all of this is wrapped up really nice and easy, and that way you know what reality is at the right of the chart. This would have plotted with a B. It would have said strong buy. Would have given you more information on here to run through that expert advisor on the profit targets and such, and the stop losses. All that's been calculated in this particular case. So we do have a filter that's just clear on the charts. And I just wanted to plot up, as I brought that same thing on here, we can see the short-term swings in the bottom left with the red and green line. And that's showing us that we're in a short-term swing up. We'll see periods where prices actually making some kind of sideways to bearish correction back down into the moving average channel. And of course, the cone or the cloud in the background is contracting. That would say we're trading sideways to bearish. And we can see the green line is dropping and getting closer to the red line crossing. So we did have at least a short-term bearish swing here. But these opportunities here in a defined uptrend, we want to be a buyer at or near support. So there's opportunities, several in here, to buy at the lower channel for Jake's moving average channel strategy. Or as you can see in here, we're going to a continuation trade in a defined uptrend. That by the cloud is green, And we have the short-term green and red lines cross back bullish again. It's going to plot another B, and we're going to get into that. So you see we had a move up and a correction to buy at or near support or on a breakout. We had a move up again and a pullback in order to buy at or near support or on a breakout of it with a JPXC trend continuation. And again, same process, and again, and again, and again. Obviously, this time price started to fail to trade higher, making new highs and new lows. And although there's a weak setup here with Williams not below average, we do get a stronger S type setup there with Williams dropping and a short-term swing to the downside and a trend reversal on here that expanded for several days. And when I was mentioning support and resistance before, at the peaks of the cone or the cloud would identify, in this case, a support because the cloud is red. So this would identify this as a significant support because we haven't been below that. But in that same mindset, anytime the cone or the cloud is expanding and gets to its maximum point, we'd have some kind of resistance. And again, we can see in the past where the peaks correspond to previous highs. And obviously we'd be getting higher highs, higher lows, higher highs, higher lows, until that all starts to break down into a short-term sell setup that clearly identifies another buy trigger. In this case, where expansion contraction went short-term, long-term bullish again to give us an opportunity to go long. I have been sharing a fair number of results, and we're going to get into that so we can see how this has been walking forward. And as I mentioned before, as we're looking for the markets expanding, and I marked this up a little bit more, if you're noticing where the cone or the cloud in green here was generally getting bigger, contracted into some kind of correction, didn't reverse, expanded again, right? We're able to see that expanding market bull trend on here, and that's what we're looking at. And as I mentioned here, at the peaks of the widest part of expansion, we're going to be able to identify, in this case, a resistance also on that, because it's again where we've seen maximum expansion and the market start to trade sideways to lower in some type of contraction area. So if we're looking at that on this chart and get up over to where we could consider this to be consolidating sideways, we can see where expansion contraction was actually in a multi-month contraction period here, generally contracting into being very close to zero or neutral. And of course, the closer you are to zero, the less you are trending. The condition is quite a bit like the squeeze. For a comparison, in a sideways or consolidating market, will either squeeze and continue or squeeze and reverse. And in this case, we had a short-term reversal that did go down and hit a price extreme for additional targets. So even that bear trade might have been profitable. But what we're looking to do is use these indications to help us with clearly identifying reality at the right edge of the chart.
Can I jump in for a second, Brian?
Sure, Jake, go ahead.
For me, it's very simple. I'm either long when the cone is green, and I'm short when the cone is red. That's all I do. If I want a swing trade and the cone is green, I'm buying the bottom of the moving average channel. If I'm short and the cone is red, I sell the top of the channel for a swing trade. But I have found that for me, using it in the most simple way possible has brought me the best results. So I'm red or I'm green or I'm nothing. That's it for me. Of course, the expert advisor will tell me what to do, and that's the best part, because two people looking at the same information, independent of each other, should reach the same conclusion. Otherwise, it's interpretive, and I can't do well with interpretation. My interpretation is no good. I can tell you really well after talking to a trader for 5 minutes if they're going to be successful. But my intuition about charts is not good, which is why I need indicators that are completely objective. That's all I have to say, and I'll shut up now. Brian, back to you.
I agree completely on that. I've actually tested how accurate I was at guessing the future, and really just 50-50, no real edge in there. And so I learned not to trust myself at guessing about the future, but literally being really accurate about where we are right now. And I mentioned also that it will, and just like divergence, so we can use divergence, and we'll use that as we see pricing making new highs over time. And generally, again, the cone or the cloud in the background generally making lower highs, which is different. If price was making new highs, we'd like to see expansion, contraction, expanding and making higher highs than before. So it will use divergence and is set up for that. And that's just one of the setups. I like the daily expansion, contraction, buy or sell setups. I like the swing trades that Jake mentioned, and also divergence. So a little bit later, when you see some chart results, just to keep walking this forward, we're going to see some JBXC buys and sells and some swing trades. I'll give those rules and some divergence trades. You have a comment, Jake?
No, no comment.
Okay, not a problem here. So I did do bull divergence, at least in here. We'll see where prices make a new low. So we basically have a low that got lower. So we had a price low, traded up, traded down to a new low, and have B, a new low. At the same point where C, we can see the indicator of expansion contraction has also been getting narrower in this case. Although the lines in this case aren't different, it's the new lows in price, A, B, and the lower highs in expansion contraction, C, D. On that one, give us a divergence that actually triggered just a day before the buy in this case, and literally about a week and a half later, missed stopping out on Jake's divergence rules by, that was less than 20 cents. And then just exploded higher. So again, Jake's mentioned that divergence is the best leading indicator of a potential change in the direction of the market. And there are going to be times when it is spot on, and sometimes when it loses. Do find that the losses are generally small and acceptable, and we will get some big winners. So, do you have a comment, Jake?
No.
Nope. Okay, not a problem. I hear the microphone in the background. I'm going to assume you might have something to say, and you can jump in anytime.
I'll go mute.
No problem. Like I say, jump in anytime. Everybody appreciates your comments, hopefully more than mine, just from experience. I did mark up this chart, which showed a previous continuation sell. I marked it up with the red arrow to show the stop, a blue arrow to show the entry, and a green to show target 1, and in this case, target 2. Sometimes just seeing where you might have got in, blue arrow, calculated stop, red arrow, calculated targets, but green arrows on here helps you see how big the stops are, how big the targets are, and a little bit of what could happen. But sometimes just seeing where the trades are or the take profits are and where the stops and profit targets are helps a little bit. So I just wanted to include this chart real quick to go through what to expect. So last session, I did share this chart. This is the Japanese yen. I have pulled up again. This is a back test because I don't trade Japanese yen futures, but I've had people say, how does expansion contraction do trading futures markets? And to be fair, as a currency trader, and I know that the Japanese yen has historically been one of the best performers, I was willing to do a test in the yen and pull it up. As you can see, knowing the stop, it was predetermined. The profit targets are predetermined. This would have had a 124-point first target, so it hit a smaller target based on the rules. But I put up the results on here just so you can see that if you do back test and go in and say, here's my setup, that's where I go in on the close of that day. Here's my first profit target by the rules you're about to see, or second profit target on that one. And sometimes it's just nice to see the results, because you'll see there's a single trade in here that's just a small winner, and there are a couple of trades on here that are bigger winners on that, with hitting 3 targets and a 404-point third target. We're going to get some big winners on that one, and some small losers on here. There is a swing trade in here that I didn't quite add on just because it was a bit congested. There has been a loss, and I will show that here briefly because I do like then walking this forward. So we had the past results. Here was the previous sell on that one. I have updated the expert advisor here just to go to the most current buy, but we did have a small profit target on a JB buy here that hit a price extreme and then had a sell trigger. went down and hit multiple targets, and eventually stopped out on a stop and reverse to a buy, which has gone up and hit some targets. So in order to walk forward, I'd like to show what has been traded and what the results would be walking forward, good, bad, or ugly. Because I will certainly say in the past, I've had an out of sample occurrence happen, meaning out of over 15 years of back testing, something happened that hadn't happened in 15 years. So we just got to expect anything can happen. I did add over the last session the extra trades out of here and the totals. Ideally, when you're trading, you keep track of the date you get in or out, the type of trade it is, whether you're buying or selling, the price you get in, what's the stop, what are the contracts, all of this as I go through. As if you're not tracking what you're doing, how do you know how to make your system better? In that instance, if it makes sense, you really got to know what the numbers say. I've updated this one way back then to an example in gold, since I walked the trade forward in the Japanese yen. Also, we know gold has been in a bull market. So in just looking at this, I walked it back to the strong buy on 226.24. So you can see expansion contractions, cloud and cone expanded strongly on that. And we went through a period of consolidation. We trended again, went through a bit of a correction and trended again. So typical bull market, identified initially with the strong buy, and where's major support and resistance on all of that. So if we were to walk this forward a little bit, and you can see we're identifying that move higher, which created some winning trades, that corrective pattern that gave us a bit of a drawdown and reduced the net gain a bit, then another big run up, which caused that account balance to go higher, and then another drawdown. Typical trading like this is what we're going to see, and just wanted to kind of pop in and show the additional setups here, the trend continuation buy. If you'd taken the first JBXC, you were in all the way over till we get a sell. If you were looking to add to a winning trade, there are the JB trend continuation trades, and they're identified with small b's. There's another one and another one on a pullback and another one, as you can see on here, and I'll mark these out a little clearly in a moment. But we do, when we have continuation trades, have the opportunity to, say, add to a winning trade if you're already in. And as you can see, I'm just starting to loop through this. And so the expert advisor did pick up the next strong buy that picked up and got most of the big winner on that one. And eventually the third strong buy to catch at or near the beginning of these moves. And did we get some losses and some possible drawdown? Yes, on that one. So I'm just kind of marking out a buy setup that had an immediate snapback reversal. That is about the worst that could happen. Today's a buy, tomorrow reverses. We're out with a loss. And we also have to be mindful of consecutive losses, because there was certainly a buy here that went nowhere. And about a week and a half later, another buy that was a small loss on that one. And so running through the results on here, this was really about a just under $40,000 move up that experienced about a $25,000 drawdown. Again, this is trading 3 contracts in gold, so it does require bigger accounts. Then ran up again over $100,000 on the single trade or multiple trades in there, and went through another $20,000 drawdown because of the buy that reversed. And this little buy went up and hit a small target on that one, but we did have a drawdown and then managed to see this run back up again. So just wanted you to see that you'll get some losses. They'll be in sideways corrective market. The pattern in the middle bottom and expansion contraction literally here is weak. The horizontal large dashed gray or dashed dot, and there's even a small dash in here that's telling us the closer we are to zero, the closer we are to not trending or consolidating. As you see, we're likely to get losses in a consolidating pattern, or in this case, what looked to be a breakout to the downside that just totally stalled out. So we know where we'll have losses. We know where we'll potentially get some big winners. We don't know the future and what we're going to get. but ideally, you know what you have. And for the losses that we just saw, the targets that at least hit the first target, as you can see, are quite a bit more numerous than the losses in here in gold. So also in gold, in its strong trend, has had more wins, fewer losses, drawdowns, yes, but they were small and acceptable. And the run-ups give us an opportunity to get some bigger winners. So on that note, I am at least going to pop up, as I said, daily chart tradable setups. I do like expansion, contraction, buy, sell setups. Daily swing trades, which are, say, in a defined uptrend, we're buying at or near support. And we'll include some rules here briefly, and also at least daily divergence on the daily chart tradable setups. And one thing I learned from Jake is that if you do trade a relatively small basket, you're not out there looking at thousands of possible choices every day and getting quagmired in TMI or too much information. Has certainly been there, done that, and learned from Jake that the small basket process is actually more consistent and easier to trade than randomly trying to trade the entire market and when they have setups. So these working in strong trends. Apple, by the end of the year, and the last results were different on the previous post because it didn't include into the end of the year. As you can see, Apple positive on these setups. Amazon actually still has some trades open, so that's why I've got 1582 for the year plus. It's got some trades still going from last year, and they've not closed out yet. So mark to market, already figured that one out from December 31st, but we're continuing to trade on here on that. And even for the new year, we're starting to see at least some gains in the stocks and currencies. Microsoft underperformed this year. The charts I'd showed before had Microsoft performing in the 15s to 20+% for the year using these setups, and that's a minus 0.13. To be honest, that one was no longer strong trending by August, and that's why when we drop down here, what you'll see popped on this list was Palantir to replace Microsoft, because if something's not strong trending, I'm not going to keep trading it. And so when Microsoft dropped out of the strong trend list, and Palantir, another tech stock this time involved more with AI, was on the list and strong up. So just a couple of trades going into the end of the year showed that positive outcome. NVIDIA up, Q's up, Tesla up on that one. Although admittedly right now Tesla's in a bear trade on that, as are, I should say, some of the others. So like Apple. I do trade retail currencies, and again, small basket on there, a couple of cross currencies, Euro Aussie, Euro Yen. Typically the Yen and the Euro Yen are the top performers. They were this year, and the basket of currencies actually ended the year quite positively. The basket of stocks kind of ended the year flat going into the Christmas rally, so to speak, and seasonality from jakeseasonaltrader.com. We're expecting bull markets down in the Qs and the indexes, so to speak. And I'll have to say the Christmas rally this year was a bit of a fizzle. But that's the way it is. Some years works out great. Stocks fizzled out at the end of the year. Currencies picked it up. They both were net positive outcome, as you can see, and I'm still happy with the results, even with something rotating out. As I said, I'm popped up the rules. So if you've got a screenshot tool, screen clipping, whatever, or OneNote, you can take screenshots of these. These are the exact rules, as Jake was mentioning. When to get in on this one, where we have closing the upper half of the bar on a expansion, contraction, buy setup, and Williams accumulation above average to entry at the market on close. And as it says, just before the day's close, the stop 2 times the moving average channel. That's Jake's stop loss and profit target. On the stocks, at least personally, I do shoot for 3 times the first target. Although if price hits a price extreme, and if given the Keltner channel values, this is a simple Keltner channel band based on the close with a 20 period and a 3 average true range vector. Chester Keltner, who developed the Keltner bands, basically said when we get beyond 3 average 2 ranges, say above or below the median or this 20 moving average, we should be at some kind of price extreme, and it makes sense to take some profit. So that's why I have it as an alternative target. And if we do see Williams AD change the trend, we have an exit alternative. And as I mentioned in here, we do want to add to winning trades once we are at break even, as if you could make a big winner bigger, all with the same risk you're taking now, that would be preferably mathematically. And as I said, the rules on here have all been back tested and proven to be consistent. And also, we should say, not overly optimized, but at least optimized to a long back test, no less than 5 years, up to 20 years on the back testings here. I'm not going to read through all of the rules on here also, but if we have strong setups, we can also have weak setups. And again, this might be we're got a buy setup, but Williams AD is below average. Right, we'd have either rules to wait for further pricing to go on, or as Jake says, wait for 2 days in a row for Williams AD to be above average to trigger the buy. Whatever your rule is, it's got to be a rule, and it doesn't have to be exactly what you see here, but it should be clear, and it should be codable, and ideally back tested and walked forward as we're doing here. I am doing the strong XC sell setup in here, rules to get in, the entry, the stop, T1, T2, alternative exit rules. I'm popping up the weak buy setups now, and ideally you're able to take fairly quick screenshots of these. If not, email me. It'll be available at the end, and still give you the rules. I want you to be able to use a system without spending all your money to buy the system. Make the system work for you. And that's the most important thing, as we don't know what your style is, and we don't know what your risk tolerance is, don't know how you're going to use these. So I technically can't guarantee that you'll make money using these setups. But that's just the regulations talking on that. I'd prefer to know something that I can prove from the past to be consistently profitable rather than something that we can't. So literally, as we go through these swing buys and swing sells for not only Jake's rules in these cases, but mine, I want to make sure you've got all these and you're 100% clear. So the expert advisor benefits here, basically today, we'd want to have the setup, trigger, follow through Jake's process with clearly defined reasons to get in or out at a gain or a loss that are risk limiting for the losses and profit maximizing for the gains. Ideally, we know exactly when to add to a strong trending position, to, as I say, to maximize a big winner, all with the same risk you're taking now. And also in here, if it's been back tested, that means it's codable. And then you're back to the proof part of this. So that's pretty much what I've had to run through expansion contraction. As I said, it is back tested and walked forward. I'm still willing to share the results in future system or future programs. We'll update the results. And ideally, if it does see a little bit of ugly, you're going to show that too. Right now, obviously, Microsoft was the first rotate out, and we should have those rules. If it's no longer strong trending, rotate out of that into something that is strong trending. And as I mentioned a little bit earlier, the expert advisor's power console that's available in here, it does also allow you to do certain system tests, and Metastock is set up for the stop and reverse, and the stop and reverse and reentry. And as I mentioned a little earlier, when run against the over 500 component stocks of the S&P, you can see the cutoff here of the losing trades out of the 500 plus and the ones that lost a little bit bigger. And then on the flip side, all of these were winning trades, getting bigger and bigger and eventually bigger. So we did have more winning trades in that sample than losing trades, and did have bigger winners compared to smaller losers on that. And those ideally, if we're looking a bit of, say, internal data, if you can show me the numbers and the numbers work out with some consistency, then that's something that we know we can work into the future, and you should be willing to do some long-term tests. As we get towards the end of this, and here I'm just going to say that I've been currently working on a high-frequency trading system and have done over 2,522 consecutive trades to do a big test with a large sample to get some type of historical results that we can trust. So if that's doing better than 60%, yes. Is it doing better than 1-to-1 profit to loss ratio? It's just slightly less than 1-to-1, but the net gains are 1.57 times the net losses. And in looking at all that internal data, that's one of the things I know that Jake's really good at doing is just look, show me the data, and I can tell you whether it's valid or whether it's BS in that case. And literally, if you're going to trade something, really just ask somebody to show you the data because it should be there for you to trade into the future. So that's about what I've got on here. Jeff, are you ready to jump back in and potentially answer some questions on how to use the Expert Advisor and Power Console?
Oh, absolutely. I was going to show how easy it is to run a scan real quick. I think you've done a really good job of highlighting the Expert Advisor and the Power Console. But we do have no questions, really a comment that I wanted to kind of share with you and Jake real quick.
Sure.
Tom Petty in the questions has chatted, Jake and Brian are, in my opinion, the Superman and Batman of the trader's education world.
Oh, thank you, Tom.
Who's who?
Yeah. I had initially read that as Batman and Robin, but I kind of like the fact that he kind of went with two superheroes and not a sidekick. So in any case, do you have experience from, we get a lot of customers that are kind of like in international markets like India, Singapore, London, do these work pretty well in your experience with international markets?
Well, I don't have tests that I could say I can prove it because it is one of the things I like about what we do. If you've got tests and you can prove it, nobody can basically say that's not true. Or if they try, you can say, well, great, just remember I can prove it. What I am going to say, because it is a strong trending indication of price movement, that it should work well in any individual instrument in any market that is strong trending.
As long as it's a free market, as long as it's not a manipulated market, yes, it definitely should work.
Okay, thank you. Let me grab the control here again. We had a question in terms of how the scanning works. So I just kind of want to do that and kind of just show that real quickly and talk about the special offer we've got for today. So before I kind of take over thank you, Brian. Thank you, Jake.
Okay.
Appreciate it.
And thank you, Mr. Petty.
All right, cool. Let me go ahead and show my screen real quick. It is actually, oh, here, I'll turn on my camera too. Hey, good to see you. All right, it'll kind of zoom in. And initially it comes a little bit hot, but it kind of does a pretty good job of balancing the colors. Anyway, I did just pull this up in with a chart of GE, a stock that I'm currently in. Just kind of wanted to show you how everything is very, very automatic. You'll notice we've got the as Brian calls the B's and the S's on here. You've got some small S's right here, a big B, you've got a big B, you've got your trade profit suggestions. All of those are kind of automatically annotated on the chart for you and labeled. One of the things I just think this is a beautiful indicator. Forget the fact that it does, all of the stuff that it does. I call it the Swiss Army knife of indicators. It just really, really looks good, and it's really, really easy for me to understand. But I like the way that we kind of help create the commentary. When I was looking through kind of everything that was done, I was like, I really want to be able to kind of annotate exactly what's going on with the indicator at any given time. And I think we did a good job with that. Let me go ahead and just show you what we came up with. I'm going to go ahead and go to the view. I'm going to go to the expert commentary.
That is a beautiful chart, by the way.
It is, yeah. And so here we've got like the long trend that says whether it's bullish or bearish, if it's strong or weak. Upswing, you've got the short-term trend, you've got the range, whether or not there's a short-term breakout. And all of this is actually kind of spelled out for you. If there's what the resistance is, what the support is, where that is on the chart, whether it's overbought or oversold, whether it's bullish or bearish, all that kind of stuff is kind of spelled out for you. You've got your stop losses down here and your profit targets down here as well. Now those will show up every time there's a signal. If we've got a buy signal, I'm going to go back, move this. You'll notice right here, there's an arrow, points right down at the data that it's looking at, and I can move that around. So if I wanted to kind of just show you what it said on that buy day, right here, you've got a buy day. Jake, did you want to say something?
No.
I heard somebody talking. Okay. Just chime in if you need to or you want to.
Okay.
Okay. All right, here we've got the long-term trend change to bullish, supporting a short-term upswing. That give you the strong buy. So I want to show you how easy it is to find these. So I've already run the exploration, but I'm going to show you just how to run it because it doesn't take a long time to run. And all I had to do, I can click on the power console here. I'm going to put it on the right screen so you can see it. I'm going to go to the scan tab. And I can scan for a number of different criteria. So I can look for the divergences. I can look for the buy signals. I could run a stock and just list out everything that's long-term bullish or bearish. I could look for sell signals. I could look for short-term breakouts. All of these are different scans that I can run. I'm just going to do the buy signals for now. And one of the things that I love most about Metastock is the scanning. I use scanning every day, and I love the depth of market. It doesn't really matter where you're at. We've got a couple hundred different exchanges you can scan against. If I wanted to go in and run this against all the US optionable stocks, for example, I absolutely could. But just to kind of show you how it works, I've already got some selected. I've got basically the Dow Jones Industrials, the NASDAQ 100, and the S&P 500. And those are already selected. It's ready to go. So I can go ahead and have it run there's also another local list that I'm going to take. No, it's not selected. Okay, so I'm just going to run this real quick. It's just those specific indices. And very, very quickly, it's going to go through and it's going to basically just find all the buy opportunities. And, we're only going through we're going through about 750 stocks right now. Here's what I like. It's rejecting 98% of them. What I love about the scanners, I really don't have the time to kind of go and look through 4,000 stocks. I really just want to see the ones that have an opportunity and be able to kind of pick my favorites from that. And this is what it allows you to do. It's basically going through and kind of annotating that list, which is done. So right here, out of those stocks, 735 did not have a setup, 15 did, okay? If I wanted to know which ones had a strong setup, I'm just kind of manipulating this a little bit here. I can just sort them based on the strong, and out of the 750, if I just want to find the strong buy signals, I've got Edwards Life, Elect Indus, Go Telecom. I can save these to a list. I can open up the charts. I can kind of take a look at them, see which ones I like, and then it's allowed me to kind of do something that's a little bit more actionable and a little bit quicker. So I like to scan the indices because I generally am going to get something that has a little bit more higher volume, little bit of liquidity, that kind of stuff. That's how I like to scan it. So, but you can scan anything you want, whether it's here, where it's somewhere else, internationally, whatever. So in any case, let me kind of go back to the slide deck real quick. And I just want to talk about today's offers. We talked about kind of like all of the stuff that it does. I have this spelled out again here. I'm not going to necessarily read this just because I don't read, you can go ahead and kind of take a look at it, but it does kind of identify a lot of different things: long-term strength, short-term strength, trend, whether that the range of the stock is expanding, whether it's contracting, gives you the overbought, oversold. See, look, I said I wasn't going to read it, and then I read it. Divergences, short-term breakouts, great indicator for that. You have the scanning, you have the expert advisor, you've got the system testing. Those are all kind of put together. Another thing that we did that I really, really like is when we released this, we sat down and did a 2-part training session. That's available for you instantly as soon as you download the software. In the first part, Jake and Brian kind of really go through the expansion contraction. They talk about how it works, kind of how to kind of evaluate it. And in part 2, this part 2 is really kind of designed for people that are new to Metastock. And I go in and show you how to kind of work with your charts, how to set up watch lists, how to run the explorations, how to open the commentary, all that kind of stuff that you'll really want to pay attention to if you're getting Metastock for the first time as part of this. If you don't have Metastock, I'm going to say just a little blurb about that. This year we were rated for the 32nd year in a row the best software in its price category. Metastock was. That's by the readers of Stocks and Commodities magazine. We've got 2 versions. We've got a real-time and an end-of-day version. Both of those versions offer streaming real-time or streaming data. The DC version is streaming delay data, whereas the Metastock real-time is fully real-time. But with both of them, you can now scan during the day. You can scan to see what's happening during the day or yesterday or whatever you want. That's all available. So both of them have streaming data into them. What we're going to do here as a special for you, normally the JBXC Complete is $5.99. It's a one-time payment. You don't have to pay any more for it. It's not a subscription that you have to pay again next year for. Once you purchase it, you're going to own it. We're going to do it as a $499 price. We're going to back it like we always do with our money back guarantee, where you can try it out, you can evaluate it, you can go through the boot camp, you can kind of see, is this something that's really going to kind of increase my results and what I'm doing? And if it isn't, you can get a refund. And I wish I could get a money back guarantee on some of my trades, but for somebody that trades, it's a very low risk, high reward type of an offer. We want it to work for you.
Let me add one thing here, Jeff.
Go for it.
You will find some utterly amazing trades. And if you have the discipline to take them, it'll more than pay for itself many times over. It's a fabulous indicator and a fabulous piece of software.
I agree. Cool. And try it out. Anyway. If you don't have Metastock, again, I just talked about how it's 32 years in a row the #1 software program. We'll throw in a free trial so you can evaluate it as well. We'll also include with that a lot of training and help to help get started. If you want one, you can sit down in a one-on-one session where we'll give you a guided tour of the software. So you can do all this at metastock.com/JBXC. You can call us at 800-882-3040. And you can also do it at metastock.com/saleschat. Give it a go. It's a great little piece of software. And a little, I don't think is the right adjective there. It's great software. If it helps you with your trading, you're going to love it. And it will. So 800-882-3040, metastock.com/saleschat or metastock.com/JBXC. As we wrap up, go ahead.
Oh, sorry, Jeff. I thought you were
no, you're fine. I like this format.
I just wanted to add that I know if you have questions and want to get some one-on-one help within reason, the email was there, phone number, if you want some help and you get the JBXC advisor and you go through your training with Jeff and Metastock and you want more help one-on-one to see some practical application, I know that Jake and I will be more than willing to help within reason for free.
Yeah, you guys do a great job with it too. So, as always.
Thank you. Thank you. It's a pleasure.
Okay. As we wrap up, I want to say thank you to Jake and Brian. Jake, I've known you for years. We've went to dinner before. Great partner. Just love all the work you've done. Thank you for everything. Brian, thank you too.
Thank you guys at Metastock for being such quality people with good integrity. It's my pleasure.
Patrick says thank you. Patrick, thank you for being there. And for everybody that came, thank you. If you liked and subscribed, an extra thank you. Let's see. JBXC, metastock.com/JBXC. Stay healthy. Stay well. I'll see you at the next event. Thanks, everybody.
Yeah, bye-bye.